Good morning and welcome to the Orlando Real Estate Buzz. Brenden Rendo with the Homes in Orlando team and joined by Joe Dion of Aptly Home Loans. And both of us took a week off last week. Needed a little refresh. Plus my driveway was getting fixed.
I hope it looks great.
I'm very happy with it. But boy, was that stressful. Oh my God. So that's kind of like all the stress we're seeing from all the data coming out in the economy right now. So today we've got the jobless claims numbers coming out. We have home prices, what's going on with those, the outlook for inflation, kind of interesting. And then the poor home builders taking it on the chin. So that's what we're going to be going through today. So again, welcome to the Orlando Real Estate. All right, Joe. So we got jobless claims coming out. Not the best.
Could be worse.
Huh?
Could be worse.
Well, they haven't been revised yet, right?
It's fair. Fair. I mean,
they haven't been revised yet. So based on the information that's being provided at this moment, wasn't super good news. We had an increase of 11,000, but then the long term, which is, I think this is one of the things that the Fed is looking at a little bit more than just the short term week to week. We saw another increase in the long-term unemployed of nearly 30,000. So people aren't replacing their jobs right away, which is a little bit nervous. So that's one of the things and it's going to be interesting because of course the big thing this week is we got Jerome Powell and his speech tomorrow in Jackson Hole, Wyoming. And that's, I think, gonna move the markets more than anything on how dovish or how hawkish he comes out on everything. And I think they're still pushing on the inflation number. But here's an interesting thing, because one of the big parts of the inflation number is home prices. And for the third month in a row, home prices have ticked down, not gone up. And this is what I find interesting is Redfin is a good news provider, but sometimes I don't correlate with the way they calculate their numbers, because they're still showing that year over year that we're looking at about a 2.9% price increase in home. And I'm kind of like, really? We've got more price decreases than ever before in housing. And in Orlando right now, according to the numbers, we're number 4 this year in price decline. July, Orlando saw a 3.6% price decline, which I truly believe, because you're getting incentive or price cut after price cut after price cut on a lot of these homes. And when we actually look at the numbers this week, we're gonna see that. So that's kind of interesting. But then again, you and I have talked that I'm not sure how they actually calculate in the inflation number, the what do you call it? The home inflation number. I know how they do the rental. The rental, they just make phone calls, which is hilarious.
Yeah. We might have to look this up and get that answer.
Yeah, but just you're seeing a lot of pressure coming down on these numbers. And here is that's not the one I wanted. Sorry, Joe. But one of the things I look at on a daily and I get on a daily basis is from Zillow. And Zillow has been, they do a monthly report by zip code, and all the zip codes in the Orlando area, they're projecting anywhere from a 1% to a 1.4% decrease over the next 12 months. And I can kind of see that. I can see that happening, and just the continued price decreases. And I know several of our listings right now have just kind of sat flat. I was hoping that maybe, because they're in the price range of where people who are getting the Hometown Heroes program would fall into. We've got them anywhere from about $250 to about $450, and that's really kind of where that income and the incentive falls in that Hometown Heroes. So I was hoping, over the weekend, because Monday the Hometown Heroes program started up. We can get up to 5% of the purchase price and down payment assistance.
Which let's talk about that real quick. How much do you think is remaining?
What did I say? I think I said 25 million will be gone within a day. What's
not even close.
Really?
according to e-housing for Florida, 46 million is still remaining.
Holy cow. Really?
So that they're saying for the first 3 days it's been available, only 4 million has been reserved.
Wow. That to me just goes to show everything that we're seeing in the news. It backs it up in that people are scared.
Yeah.
People are nervous about their jobs. They're nervous about inflation. They're nervous about, all these tariff deals. They're nervous about all the wars going on. And people are just afraid to pull the trigger.
Yeah.
That shocks me, because every other time we've done this over the past couple years, on average, what have we seen? Like 20%, 25% gone within the first week?
Yeah.
Somewhere in that ballpark?
Easy. And we're not seeing it this time. I mean, we're sitting on, maybe, I guess we get through Friday. If we get down to 40, that'll be 20% gone. But that feels really light. Like we were seeing 25, 30 million gone in a week when we had 100 million available. So it's definitely very interesting to see this. And I think it speaks to everything, like you said, it speaks to kind of the state of where we are. Like things aren't moving. People aren't it's not like everybody was like, and I kind of expected we were going to have so much pent up demand that it was like, people were just waiting to request these funds, like already under contract. I just don't think that there's enough volume happening, meaning, transactions happening to rifle through this.
Yeah, I agree with you wholeheartedly. And it's just, that is shocking. But hey, if you are in the service industry, give us a call. We'll make sure your job qualifies. It's a fantastic program, absolutely fantastic program. I mean, you're going to get 5% of your purchase price to use towards down payment.
Yep.
Here's one thing though, is I actually got a call yesterday for assistance, because I've done a couple short sales this year, for assistance on short sales. Guess what the problem is with this short sale?
These type of loans.
Yes. They had the Hometown Heroes down payment assistance program, and they have to sell their house, and they still owe $17,000 on the down payment assistance program. And the down payment assistance will not take less than what's owed.
Yep.
So this is going to be an interesting battle on this short sale.
Yeah, because you're going to be trying to go to the first lien holder and say you need to take less. Because of the state program, they may not be willing.
No, they may not. It's gonna be a battle. So, but it's interesting dynamics, because we got the prices coming down, right? And then I understand why the Fed is being hesitant with the inflation. And a perfect example that we've got is the Bank of England. The Bank of England, and everyone who's espousing for the rate decreases is, look at the Bank of England. They've cut 4 times. Well, yeah, they have cut 4 times. But look at what their projected inflation rate is for the coming year. They're up to nearly 4% inflation.
Yep.
And I think this has been Jerome Powell's fear all along, is we cut the rate and we're going to force inflation. And he's just going back to the early 80s when they did it, pushed the rates up, felt like we're in a good spot, dropped them, and immediately inflation turned around and shot back again.
Yep.
Because then we got some manufacturing numbers today, and it was kind of flat. But the underlying thing, again, that was inside the numbers, price increases are remaining widespread.
Yep.
So the price increase indexes within manufacturing, again, are showing all those signs of inflation, which really goes back to our PPI last. So what did it do to the outlook? Well, in 2 weeks, everybody, remember the beginning of August, we were like 99%. We're going to have a rate cut in September. Well, on the news today with the manufacturer, we've dropped to 75%.
Yeah, that's a big drop.
It's a big drop. So people are starting to get more pessimistic that we're going to have this rate decrease coming. And I don't think I'm 50-50. I think I'm probably saying maybe 40% chance that he does it right now.
Yeah.
Which is kind of high for me. And I'm really going to watch his speech tomorrow, because that I think that will tell us everything on where we're going into September.
Yep.
I mean, every time he's had his speech the past couple of years in Jackson Hole,
it's been hawkish.
The market's moved, and it's moved big. So this is the one we're watching. And you got to know the home builders are going to be watching too, because home builders are getting crushed. I mean, we have right now probably historic level of incentive from the builder.
Crazy.
Yeah.
The amount of
And
incentive.
the index came out this week, and the one that really shocked me more than anything was this one right here, buyer traffic. This is on a 100 point scale.
Yeah.
Buyer traffic is at 22 out of 100.
But it's ticked up 2 points. So that's a 10% increase in traffic.
You're so optimistic. Yeah. But you're just looking at this. And I mean, I was looking through because I saved my builder emails in a folder because I get so many of them.
Mm-hmm.
I've got 78 emails from August 1st from builders on incentives, on new program.
Mm-hmm.
It's just, you're sitting there and you're just like, these things are absolutely amazing. Here's a couple examples. This is Madame A Home. On all their quick move-ins, they're offering up to $30,000 in flex cash right now. Nice, right? And then here's MI Home. To us as agent, they're offering a $5,000 bonus to push people into their home. On the quick move-in.
Okay.
Then this is Pulte's out there. I mean, this is over in St. Cloud. They're offering, $40,000 to $60,000 in flex cash, plus another $20,000 in closing costs. Plus, they're going to buy your rate down to between 4.25 and 5.75.
Wow, that sounds great.
I mean, what do you think? What do they? With that buy down and those incentives, they're spending what, about $100,000 to sell the house?
I mean, you got to feel like it. Easy. I mean, $50K flex cash.
Yeah.
$20K toward closing costs. I mean, that's 70 right there.
Right there. And
I mean,
probably going to cost them what?
4.25 to 5.75, maybe. I mean, depending, maybe 15 to 20K, maybe more to get the rate down there. Like, is it smoke and mirrors? And the sense of like that 20K toward closing costs is like either or. Like,
no, it's not. It's unbelievable. It's they're the only thing they're not throwing in is like a year's worth of groceries.
Yeah. Well, I mean, you got to upgrade for the kitchen sink, but
that's true. Yeah. And then you look at the houses that aren't even finished being built yet. Here's one under construction, and they've already done a price decrease on the house.
Nice.
And you're seeing that a lot too. Price cuts as well. So the builders are just trying anything right now to get these houses to, and I don't get it because they're just not stopping the building around here either.
No.
But to me, the hardest part is, I mean, you're looking at Eustis, Lady Lake, places outside the scope of where I would normally go anyway, because it's, hour drive. I'm not going to sell a house, not a chance at all. But it's just amazing what they're trying to do to push these home sales back into the market. So, but we do have some good news. We actually have some good news for homeowners. And this is kind of nice because there are several Florida home insurers who are asking for some pretty good rate decreases, which is nice. When was the last time we saw a rate decrease in insurance?
That's interesting.
So you've got Florida Peninsula. They've asked, and it's supposed to take effect the end of October for people until the hurricane hits, right? So 8.4% for homeowners and 12% for condos, which you're paying $2,000 a year, $200 back in your pocket a year. Hey, I'm not complaining whatsoever. Yeah. Then you've had some others. Safe Harbors had almost a 12% decrease. U.S. Coastal 12%. Castle Key 11%. So you've had several home insurance companies, put in for price decreases.
Interesting.
Which is nice to see, for a lot of homeowners. It's not a lot, but hey, it's better than going in with another 10 or 20% price increase.
Yep, agreed. How long will it be lived though? Like, is it like
I think it's a year. I think it's 1 year because they're allowed to do. I think they're only allowed to put in price increases or incentives once per year. Something like that. So
they're going to drop. Are they just trying to gain market share and then they're going to bring it right back up? I don't know. But it looks like a lot of them though, right? Like,
yeah. I mean, it's a good number. It's 1, 2, 3, 4, 5, 6, 7 insurance companies. I mean, maybe it's just because, storm wise, past couple of years hasn't been super bad. I mean, we've gotten hit, but at least on the East Coast, we haven't taken a direct hit. Aaron was looking pretty big there for a while,
I mean, we knew it was going to turn.
Yeah. So far, good Lord above, we'll maybe stay safe for a couple more years. And I think as long as they don't have to do those big payouts, I think we're in better shape. plus, I think part of it also is the depopulation of a lot of people off of citizens.
Yeah.
So they're actually picking up more homeowners because of that depopulation process. And I think that's helping maybe spread out the risk a little bit more.
That might make sense.
So that's the good news. And then hold on one second. Then we've got our Aura numbers for the week, and we're still sitting right there at that 400 homes level. And for the past couple of weeks, we've seen a little bit of a decrease in the number of homes on the market.
Yep.
Which kind of makes sense because, a lot of people on vacation, people aren't putting their houses. We've had about 1,000 homes withdrawn over the past 4 weeks. So that number's helping to push the number down a little bit. Same situation with the condos, again, sitting at that 100, a little above 100 number overall. What it's done though with the decrease, with decrease, you figure the months on inventory might go down, but we've actually gained about a month of inventory because the sales numbers have decreased. So we're up to that 5 months worth of inventory. And then this is interesting. The original list to sales price on average is about $45,000, right? That's a pretty good number. And where you're seeing is look at this between the 500 and a million price range. There's the 45, and look at over $1 million. They're dropping nearly $200,000 per sale. That's a pretty good bump down. Yeah. And our original sales, percentage wise, we're sitting at 92.5. So again, we're seeing that downward pressure because this number keeps getting a little bit lower overall. And our days on market are still sitting high, 64. Nationally, the national average is 43 days right now. So we're sitting about, 40%, 50% higher than what the national average for days on market here in Orlando. And then graphically, here it is, man. We're just pretty steady line, slow, steady, nothing going crazy. And then foreclosure wise, we've seen not too many. I'm starting to see more short sales though, like the one I got called on the other day. Starting to see those pick up. Then the temporary off market and withdrawn. Here, if you go back, 4 or 5 weeks, you add these up and it's over 1,000 homes being taken off the market. So that's keeping that inventory number pretty steady overall. Then we get into our condos and, same thing. Look at this. I mean, we're sitting basically 9 months of inventory on condo. And then you get up into the little bit higher priced ones, that 400 to 500, 16 months of inventory. That's a huge amount. Then 500 to a million, 15 months worth of inventory. And then our original list to sales price percentage, below 92% right now with 85 days on market. So, I mean, condos it's just a total buyer's market. I mean, I can't believe it. We actually put the one that's a condo hotel, I think I talked to you about it. We actually offered owner financing with 20% down at a rate that's about 1% less than investors. I'm still not getting any calls. Not dead as a doornail. Here you go graphically again, just slow, steady, nothing major, no big changes whatsoever. So the market's just slowly but surely moving along. August has always been a little bit slower month overall. And it's just holding up to that. I'm just hoping that I'd like to see Powell maybe loosen the reins a little bit come September. How much of a difference will it make? I think more it will be more mental than anything economic if he does a quarter point cut for everybody. Yeah. I don't see it making too much of a difference. Maybe we start holding pretty steady at that 6.5 rate. Well, I mean, last year you and I talked about it. It seemed like when we hit that 6.5, the market opened up a little bit, volume picked up a little bit, but this year it hasn't done that. Yeah. I mean, where do you think we need to get to kind of loosen the reins for?
Yeah, I feel like, last year, a lot of what we were looking at is, it felt like it was so high that when we saw it get down to 6.5, there's a lot, but I think a lot of people felt the economy was a lot stronger. So I think this year we've seen a lot more bumps. So I feel like to see it kind of get down, like I think that the number now is going to be, a 6, 5.99. I think we want it. And there was the talk for so long that we were going to get there and we were going to be, I think that's kind of where people are holding out now. It's because we do see that slowly tick down, but it's not seeing the same response. And I think there's so many other questions now outside of just interest rates and affordability. It's economy, job security, stuff like this. So like to get that movement, people want to see that payment be a little bit more comfortable than what they were okay with a year ago,
Yep.
I think that's the key. So I think we get, sub 6 again on conventional, that'd be 5.5 on FHA VAs. Like, I think we're going to see a lot of the market move. Like, we're going to see a spike in, closed home.
Yeah, I think you're right. I think that it just seems like there's a lot more anxiety overall with the economy. So hopefully, these trade deals finally do get settled out and we start seeing some of this stuff. But it's a guessing game at this point.
Yep.
I think
exactly.
A lot of guessing game. So, well, thank you all for joining us here at the Orlando Real Estate Buzz. Please subscribe if you're on YouTube or Facebook, and please join us every week as we keep you up to date what's going on nationally and how it affects the Orlando housing market here.
Cool.